Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is September 22 and we're starting from euro-dollar pair with Din Leo. The EURUSD pair has returned to the previously traded range 1.0680 1.0650 as a part of a pullback from recent gains. This does not disrupt the integrity of the downward cycle. On the 4-hour chart, the RSI indicator is moving in the lower area 3050. Indicating that the bearish sentiment remains in force. On the same chart, the alligator's MAs are headed downwards, corresponding to the main cycle's direction. To extend the bearish scenario, the price should remain firm below the 1.0600. In this case, it could move towards the next key level at 1.0500. However, there's still a strong signal of the euro's oversold conditions despite the corrective phase. Therefore, there is possibility of a subsequent retracement if the price remains above 1.0680. In terms of the complex indicator analysis, we see that in the short-term period technical indicators are pointing to a corrective phase. Meanwhile, in the intraday and mid-term period, the indicators are reflecting a downward cycle. Let's hunting for sellers' stop losses with Andrei Shevchenko on GBPUSD currency pair. Following this week's events, GBPUSD fell in price, reaching a quarterly low at 1.2235. However, the price action may converge around 1.2420 in the near future. This means that traders could consider long positions from the current prices, placing a stop-loss order at 1.2267 or 1.2235. Set take profit upon the breakdown of the 1.2420. The trading idea follows the framework of the price action and stop hunting strategies. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Din Leo. Gold chart has a bearish trend, with a chance for a short-term rise to the first resistance at 1928, before potentially falling to the first support level at 1915. Key levels include first and second supports at 1915 and 1901. Both overlap supports and first and second resistance at 1928 and 1937, with the former aligned with the 50% Fibonacci retracement. And finally, here's Laurie Bailey with AUDUSD pair focused. Let's have a look. Yesterday, the Australian dollar edged down amid a broad weakness of counter currencies. The lower shadow of the daily candlestick tested the target support at 0.6388. The Marlin oscillator remained in a positive territory, indicating an uptrend. Now we can expect the currency to rise towards the target level of 0.6490. If the price stays below 0.6388, it could open the way to the target at 0.6295. On the 4-hour chart, the price is trying to rise above the balance and MACD indicator lines, but it won't be easy, as the Marlin oscillator is in a negative territory. The first and closest sign that AUDUSD is ready to rise further would be when the price settles above the MACD line and the nearest peak at 0.6432. That's all for today. See you online soon and good luck.